Hey, this is Awais with EminiPlayer.net, and this is a recap for Friday, April 11th. So heading into the day, our main expectation was that ES would balance in a wider range, but we still expected more edge on the short side. We had resistance at 22 to 24, pre-market resistance, and then initial resistance at 27.5 to 29.5. On the downside, we had pre-market support 10.5 to 12.5, and initial support at 04.5 to 07.5, and we expected responsive buyers to be active there on first test. Heading into the weekend, the expectation was that anyone who was short the market would take some profit at support, so that could add to the buying pressure at support and result in some bounces. But overall, the idea was that the market would balance at lower prices below initial resistance. So that being said, let's jump into the charts and go over the setups. So the first setup is the short right at pre-market resistance, 22 to 24. And this is essentially a straight line move into that resistance. So short term, you can expect some exhaustion anyway. But this is valid resistance. And you can see that we get a pretty decent sell response all the way down to the overnight low. Now, because we're expecting balance, we can see this kind of activity, right? Balancing in a range. Basically, buyers entering at support, sellers being active at resistance. So it is a good idea to take profit as we're heading down there. And if we look over at the 1 minute chart, we can see that this is a nice minus 6,700 tick reading into the overnight low, and then a pretty decent 1 minute bar sharply back up towards 1816. So ideally, if you're shorting the zone, you want to have a resting order to take profit right around 14.5. And then we had pre-market support right underneath here. Buyers entered one tick ahead of it, and then we got a bounce back up towards the initial resistance zone. Now, I still would not trade this to the long side. Per the plan, the idea was be more active on the short side at resistance, and only really take a long setup if the market's quite extended and exhausted heading into a support zone. Now, this again is a straight line move down, so there is some short-term exhaustion, but it's not good enough, in my opinion, to jump in aggressively on the long side. I mean, if you did, the trade idea still worked, and we ended up getting a pretty decent bounce. But as far as the trade ideas that were really in alignment with the trade plan and in alignment with the larger time frames, that would be the short at pre-market resistance. From that point forward, the next short setups are initial resistance up here. You can see that the first test we get a little bit of balancing, and then we head up, take out this high by just a little bit, and then we get the bigger failure. And this is not an uncommon pattern where you shoot up, test resistance, kind of balance a little bit, and then head lower. It doesn't necessarily have to just touch and reverse. Usually when you have this type of momentum heading into a zone, it's it's not going to just touch and just reverse completely. Usually there will be a little bit of balancing before the larger time frames take control, and we get a deeper pullback. So over here, you want to be short initial resistance, and you're looking for a move back down towards the lows. This is not a market that's going to simply bounce at the highs and just head higher. The idea is that on the larger time frame, sellers are very much in control, and eventually, we are going to test 07.5 and even lower. So the trade idea here, the reward to risk, is very good. Your stop basically needs to be behind the zone if you're entering short here, and ideally even a little bit close to the overnight high, maybe like 30.5, 31, something like that. That's a pretty safe stop if you're shorting the 27.5 to 29.5 zone. So you're looking at potentially a 2.5 to 3 point stop, and on the downside, you're targeting a retest of the lows. You're targeting a retest of 14.5 and then even lower, because again, on the larger time frames, the sell side is very much in control at this point, and we're not expecting any type of reversal. And in the event that this came up here and then shot through the initial resistance zone, we would still expect eventually a failure and a return back down to the lows. So in the event that this trade idea hadn't worked, I would still be looking to short the market at higher prices and then looking for a big move lower. So that's really how the day ended up playing out, very much as we expected. And then as it comes down into this support zone, you definitely want to have a resting order 7.5 to take profit. Right now, this is quite extended to the downside, and we're not expecting an extremely wide range, right? The idea was that today, even though the relative volume was running high, because we had already put in such a wide range the day before, that today's range, Friday's range would be somewhat limited, even if we're running on really high volume. So the idea was 20 to 30 point range day. Heading down here, you're pushing a little over 20 points. So heading into support, almost a straight line move. Definitely want to take profit. And then you can see that we just balance into the close. And, that idea of the short sellers wanting to take profit at support heading into the weekend basically plays out right here, right? And you get that buying pressure and a bounce back up towards the 16-17 area. So, you're simply taking profit at support and then calling it a day. So really the two high quality setups were short pre-market resistance and then short initial resistance targeting a decent move down back to overnight low and then down potentially to 7.5 support. But of course you would have to hold that trade for pretty much the whole day to actually realize that gain. So that's how the session ended up playing out. Now heading into the next week, the sellers are still in control. That 22 to 24 previous balance area low can still act as resistance in the event that we actually go all the way back up there. But right now, the major inflection point on the downside is like the 1790 to 1800 range. There's decent support within that entire price range, and I do expect buyers to be active on first test of the support zones below. So, the 1799 to 1801 area is good support. Below that, we have support at 1795 to 1796, and then around 1790 to 91 is pretty decent support as well, and that's on the larger time frames. So that's where we can get potentially a bigger buy response and move back up towards the 22 to 24 and the 28 to 30 area. So from a reward to risk perspective, as we push lower into that 1790 to 1800 range, there can be more of a battle between the buyers and sellers, and some of the larger time frame buyers can then step in. And I think we'll start seeing more edge on the long side as we push lower. So, short term, I think that there is still some more downside potential left in the market. I think that pushing, into that 1790, 1800 range is a pretty decent probability scenario. But then once we're in there, I think that's where the larger time frame buyers can step in, and we'll start seeing more of the balancing activity in that price range. And in the event that we push lower, it's just going to attract more buyers, and I think we'll start seeing more buying activity as the market pushes a bit lower here. So for now, it can be balanced. We still expect edge on the short side on any bounces back into resistance. And then for the long side, as soon as we get below 1800, I think you'll start seeing some better edge on the long side. So that's how the market is shaping up right now. Let's see how well the buyers and sellers can maintain their respective control overnight, and I will update you in the morning.